So only $900 million is mine.
Okay.
The other $100 million is from friends and family.
Okay.
The largest one being Sequoia Heritage.
Oh, nice. That's
and
a good
the family
friend.
being real family. Like
Yes,
my,
okay.
my sister, my brother,
Okay.
my niece, and my nephews. So we're taking that $1 billion and we're putting it into a small cap, about $15-20 million market cap. Well, it was. It's doubled its stock price today, so maybe it's 30 or 40 million market cap now, called Silver Sun Technologies.
Okay.
And we're then going to spin that company back off to the legacy shareholders of Silver Sun. So in a few months when the deal closes, the Silver Sun shareholders will have their company back. They'll also get a $2.5 million dividend, and they'll get about a 0.3% share in my new company.
And your new company is going to do what?
Well, we haven't announced the industry yet. I wanted the market.
But you're going to use this public entity,
Sure.
this vehicle, to make an acquisition.
Absolutely.
So tell us what the acquisition is.
This company will be publicly traded.
Yeah.
It'll have $1 billion in cash.
Okay.
And we'll do the same playbook that I've been doing for decades. I'm going to consolidate an industry. I'm going to buy companies. I'm going to assimilate them. I'm going to improve them. I'm going to get synergy from them. I'm going to assemble a world-class team. I'm going to apply technology to improve the business. And we'll be off to the races.
So you've identified the company, you just haven't announced it yet.
That's correct.
So
Do
we
you
can
want to tell us?
We've
what it is?
identified the industry.
You've identified the industry.
Okay.
We don't have a companies per se
Okay.
that we're about to buy, although
Okay.
we're talking to several of them.
Okay. Can you tell us what the industry is here?
Well, we'll
With
play bigger than a refrigerator, smaller than a bread
So I
box.
got to get you back again in
Yeah.
like, what, a week's time or something?
Something like that.
All right. So what do you look for? I mean, waste management, logistics. I mean, these things aren't sexy, but what do you look for?
I think they're sexy.
Yeah, well,
Come on.
they're sexy for your bank
Look,
account. I get
sexy
it.
means making a lot of money for shareholders.
That's right.
And at United
There you
Rentals,
go.
we got in, it was $3.50 a share when I started the company in 1997. And on Friday, it was over $500 a share. And
Right.
XPO Logistics, when we started in 2011, the investors who came in with me made 32 times their money as of last year. So I consider that very, very sexy.
When you put it that way. So what characteristics do you look for in a business when you go to acquire? Because you remind me of a guy, I'm going to have to think of his name again, who did this in the cable industry, the radio business, and then the entertainment business up in Boston. Anyway, what do you look for in a company or an industry?
So I look for very specific things. They've all been in industrial services. That's my bailiwick.
Okay.
I look for large industries. I look for industries that are hundreds of billions of dollars in size. I look for ones that there's lots of interesting companies to buy. It's not consolidated so much that there's not a whole lot to buy. It's still fragmented. And at reasonable prices, at multiples less than what we're going to trade at, so we get some accretion from what we're buying. And I look for an industry where it's not totally tech forward yet, and I can take our tech prowess and apply it to the industry to get an advantage.
So what industries do you see that have opportunities at this point?
You're not going to give up, are you? So stay tuned. I will definitely tell the whole world what industry we're going to consolidate, but not today.
What kind of capital structure do you think is appropriate today versus maybe when you did United Rentals, when you did XPO? Debt is not free anymore. Talk to us about that. Talk to us about maybe if there's any other external equity you need, can you get it?
So in the first instance, we'll be debt-free. We'll have $1 billion of equity that we're putting into the company, and we'll have no debt. Over time, to answer your question, I think 1 or 2 turns is probably a conservative way to approach it, given the world and the turbulence and the risky nature of what's going on in geopolitics. And in terms of it available, there's never any problem raising money if you've got a good track record and you have a good team and you have a good business plan. So I'm not worried about access to capital.
What do you think that tells us about the direction of the economy right now?
Well, I'm not going to give a prediction because my predictions have been bad the last year and a half. Like most everyone else, year and a half, 2 years ago, I thought a recession was coming, and no recession came. So I've withdrawn my conviction on predicting the economy. Having said that, I do see it being generally soft out there in Europe and in the United States. And I see it slowing. I don't see it picking up.
So in your investments, let's say what you're looking at coming forward, do you prefer to stay in the U.S.? Are you looking for a global business? How do you just think about geography? Because a lot of folks are saying, I can't go to China. Europe's the growth isn't there in Europe for me. How do you think about it?
Well, Asia has an extra level of risk because of what's going on with China. So I'm not eager to get into Asia. I like North America a lot. I like the United States a real lot for all the obvious reasons. But I don't mind Western Europe. France,
Okay.
UK, Spain, Germany. these are great countries with big economies and the rule of law.
So what we saw during the pandemic was a sense of reshoring or friendshoring, that type of thing. Did you see that? Do you see that at XPO? And how does that change our supply chain? Because I kind of grew up in an era where it was all about globalization, more and more globalization. That seems to have stalled a little bit.
Well, it's stalled a lot. I see that more in our supply chain spinoff, XPO Logistics, which has about 200 million square feet of warehouses across 1,000 warehouses around the world. There, you've seen a lot of our customers who had big part of their supply chain originating in China migrate to Malaysia, to Vietnam, to India, to Mexico, back to the United States. So that's a trend that's probably not going to turn around. I think people want to de-risk being dependent on China.
And especially when it comes to the supply chains and what we just went through because of the pandemic, where are you seeing improvements and where are there still some lags there that are issues for the broader global supply chain?
Oh, the supply chain has normalized quite a bit. It's not anything like it was a couple of years ago during COVID when it was hard to get anything and things moved very slowly and the prices were real high. To the contrary, the price of freight transportation and logistics in general has come down a lot. And its capacity, the availability of transportation is available quite a bit.
So what's the biggest challenge as you think about it? I mean, you're going to put some capital to work here. What do you think, just broadly defined, are some of the biggest challenges that you're going to have for, again, redoing your playbook, growing maybe through acquisition and so on and so forth? What do you think some of the challenges over the next several years for you?
The most important thing that has to be accomplished in any business plan, but particularly one that's going to be high growth and where we're aiming for the stars in terms of very, very high returns to shareholders, is people. You've got to assemble a world-class, real world-class, not even first class, a world-class management team that's hardworking, that's honest, that gets along well and plays well in the sandbox together, is super smart, very focused, really understands what they're doing, on top of everything. And if you can get a management team assembled that's got those kind of superstars, the rest, I won't say it's super easy because nothing's super easy, but it's relatively easy.
What's one of the top questions that you get from shareholders?
Well, shareholders are always thinking about, well, it depends which shareholders we're talking about. So there's two categories there. You have short-term and long-term. So the hedge funds and some of the high-velocity funds, they're very interested in the quarter, maybe the next quarter.
Right.
At the most, the outlook for the next year. But the long-only institutions who own 5, 10, 15% of a company and are owning it for several years, they're seeing way past that. They're not so interested in the quarter. That's interesting, but it's not the real focus. The focus is, how are you going to grow the business? How are you going to grow this business over the next 5 years, over the next 10 years? What kind of organic growth are you going to have? What kind of margin expansion are you going to have? What are you looking at in terms of return on capital? And what is the specific business plan and the levers we should watch in order to hold you accountable? Those are the kind of questions that the serious shareholders ask.